Good morning, everybody. It is the morning blast with myself, Ryan, and of course, Michael, catering to all levels of brow. You can decide who is catering for the low and the high side. I think we all know the case there. Obviously, on the high side, as usual, the morning blast. This is recorded live. There very many occasions where expletives are used and trigger words are used, so beware. None of this clapping by waving your hands bollocks. We're here, we're hoping to add a bit of value to your day and maybe put a smile on your face, or vice versa. I'm not sure which we do more of, to be honest. But anyway, before we crack on, I'll get the legals out the way. Nothing discussed on this podcast is trading or investment advice. Nothing is an endorsement unless we make it very, very, very clear. I think I've covered everything. Michael?
I would certainly hope so. Are you still there, Ryan?
I am. Can you not hear me?
Perfect. No, your mic just went dead silent, and I wondered whether you'd decided that you're just going to do the legals and then disappear today. But panic over. Good morning, everyone. We have 13 proper trading days left of the year. Not that I'm counting.
Just a bit of housekeeping. A huge thank you to our listeners, because yesterday we highest download on a single episode, and we actually smashed it. I think it was about 10% up on the previous all-time high. So lovely. Thank you to everyone.
Onwards and upwards, but there is a bull market in the morning blast, just like the one in equities.
And we won't give too much away, but more to come on the podcast front. But not wink, wink, nudge, nudge.
And sources saying more to come on the artwork front as well after pictures I saw doing the rounds last night. So that sounds dodgy, doesn't it?
It does very much so. I'll move us swiftly on.
Save us.
Only 13 days. So before we go into that, only 13 days until Christmas, Christmas markets, I guess. But is it 21 shoplifting days left until Christmas Day?
I think it is, yeah.
Wait. No.
How many brown onions can we get?
That's very much an inside joke. A few people listening will get that. But moving on anyway. Market update.
Is he here, actually? Because that might have been completely wasted.
Yeah, you better be listening. Well, where was I? Moving swiftly on, market update from our good friend Clive Lambert at Futures Techs. As usual, just to look at what happened yesterday and important levels in the major markets. Equity markets were mixed to bullish yesterday. DAX futures were green, even though it's been the underperformer for a while now. Another doji in the FTSE, which basically means it has a bit of a range but ends up going nowhere. We continue to look for a return to recent all-time highs in European and US indices. Bunds, the German 10-year bond, posted a small hammer time, but didn't worry resistance at 128.41 to 128.59. In the dollar, King dollar, we saw weakness yesterday and overnight. Euro dollar is retesting resistance at 1.1640 this morning. Cable is eyeing 1.3275 and 1.3284. Bitcoin, that has seen a nice recovery since yesterday's update, and it's now got up to $94,000 overnight. Gold, the yellow metal, this time Clive actually wrote that in the report, so say it anyway. That saw a dip to 4,194, and which attracted some dip buyers. Silver, the silver metal, thank you, Clive, made a new all-time.
I feel like he might be scraping the barrel a bit with that.
What a wanker. Made a new all-time high overnight, printing 59.655, then seeing some selling in the last few hours. Clive is still bullish. He's been bullish for quite some time. Weakness was seen across the metals complex yesterday, but most bid overnight to get it back. Brent and WTI, obviously crude benchmarks, saw red yesterday. We're trying to recover overnight, though. The European gas benchmarks, so TTF, etc., posted doji candles yesterday, so maybe recent relentless selling is slowing at least. 28.615 is the key gap resistance in the January TTF, so that's the Dutch gas benchmark. EU carbon markets saw red for a second day in a row, but still nicely above trend support, which is down at 80.31. And finally, wheat, obviously US wheat, front month contract bounced from the support at 531.6 that we called yesterday, and the question is, can it retake 545 to give the ball some more cheer? But as we have noted many times, and also on the grain blast, the wheat market is definitely the ginger stepchild of the ag market complex. But that's it from Clive. Thank you very much. I'm not going to read his WhatsApps because he'll put me off my me stroke. But It's definitely been
Your was?
my stroke. You heard me. But anyway, Michael, I don't know. I'm in a weird mood today. I have had quite a few coffees. It might be that.
I think you're always in a bit of a weird mood, Ryan. So let's try and restore some degree of normality to proceedings this morning. Where shall we start? Actually, let's start with the Fed, because we heard from President Trump yesterday, who was hosting another one of these cabinet meetings where all of his cabinet secretaries sort of sit around a table and say very, very sycophantic things, including the Homeland Secretary, Kristi Noem, who said yesterday that thanks to you, President Trump, there were no hurricanes this year. I don't know whether she was joking on that front, but there we are. The main takeaway from...
surely that was a piss take.
Mate, it's 50-50 with this one, isn't it, if we're being honest. I don't know is the honest answer. Where was I? Yeah, the big takeaway from this cabinet meeting was what Trump had to say in terms of the next Fed chair. Of course, Kevin Hassett very much seen as a front runner to succeed Jay Powell next May. Trump noted during this cabinet meeting that they will be announcing the pick for Fed chair in, quote, early 2026. Now, do bear in mind that was originally meant to be Thanksgiving, then it was Christmas, now it's next year. So this is a very, very flexible deadline, if indeed we can even call it a deadline. But later on, in another press appearance, President Trump referred to Kevin Hassett as the potential Fed chair. So very much kind of in keeping with sources reporting, and also in keeping with where market expectations for the role now stand. There was also on this front a Wall Street Journal article doing the rounds overnight, noting that interviews for the Fed chair role that were meant to take place with Vice President J.D. Vance have been cancelled. They were due to take place this week. Now, a lot of people have taken this as, oh, well, it means that Trump has picked Hassett already. This is a classic case of read beyond the headline, because even Hassett's interview with J.D. Vance has been cancelled. It is purely a result of a scheduling conflict. Although, having said that, it remains very, very likely indeed that Hassett will be the man getting the job, although we might not get confirmation of that until next year. Sticking with Trump, also during this cabinet meeting and various media appearances, he was thanking Chinese President Xi for the soybean purchases that China have been making. We also had reports yesterday that as many as 6 shipments of US soybeans for China are going to be loading at terminals on the Gulf Coast through to the middle of this month. So it does look, for the time being at least, that China are sort of sticking to their bargain in terms of those purchases.
Just on this, because I do listen when I talk to Andy, and she is definitely the brains of the grain blast, and she actually called this potentially maybe a month or even 2 months ago. I don't know, time's a bit of a just an abstract concept to me this year. But she did say that, one to watch is if China do start just going, oh, fuck it, you want us to buy, we'll just buy everything we can, because potentially the supply is pretty tight already. And also just the pipeline of getting these to the ports is also very constricted at the moment. So, China kind of wading into the market and saying mine might have some kind of follow through effects into the general supply chain dynamics of ag products in the US. So definitely one to watch on that front.
Yeah, that's a very good point. I think we discussed this previously, actually, when Trump and Xi came up with this deal. It's almost there's a risk that they will end up shooting themselves in.
It's a great headline. Oh, look, we're selling more to China again, but you need to be in a position where you can sell.
Yeah, are we shafting the rest of the market?
Yeah.
Anyway, we'll see how that one develops. Sticking with China, Reuters sources this morning noting that China is likely to maintain its annual growth target of around 5% in 2026. I'll tell you right now, here is next year's news today. The Chinese economy will grow at around 5% next year, because they will rig the statistics to make sure it says that. Well, that is just how China works.
When was the last time that their forecast was plus minus more than 0.2 away from 5%?
I don't know for definite, but I would imagine probably the COVID year or the year after COVID, maybe.
They might want for 10% then. God knows.
But yeah, like you say, taking that extreme event out of the sample, absolutely. They just fiddle the figures to meet the number. So it's not really worth the paper that it's written on. Also on China, of course, one of the other many things that they're working on at the moment is trying to build this embassy in London, actually just down the road from me at Rawman Court. Apparently, ministers here in the UK have delayed a decision over whether to grant permission for this embassy to be built. That decision will now take place in January and is likely to coincide with Prime Minister Keir Starmer making his first formal visit to Beijing that month. So something to keep an eye on.
Well, right. So on this, obviously I know we're trying to be a global centric show, but we do kind of focus on UK a lot, but fuck it, we are British. So there you go. For two things on this. One, obviously we had Spygate, which was someone in government, no one that really seems to know who, kind of bollocksed up the case of the two kind of policymakers that were involved in Chinese spying. Then the Starmer government approved originally at least the kind of the planning for this Chinese embassy, which basically sits on top of some quite strategic kind of information lines, kind of fiber optics and whatnot. I'm not getting into the details because quite frankly, I don't know the details. And there was a huge backlash. And now he said, oh, by the way, well, actually, we're not going to just sign it off. And also he did say in his speech yesterday that China are a significant threat, which is all well and good. But I do get the impression he's just saying that to kind of pay lip service to the people that are concerned, which is including the security services. Because quite frankly, if he's delaying the decision until like the month that he's going over and speaking to Xi, he's not exactly going to turn it down if he's then flying over to say hello.
Well, this is it, right? And
if you're already planning your holiday to go see him, you're not going to go over there with bad news.
No, and this is exactly what I was thinking when this news broke yesterday. As you rightly say, if you're going to turn it down, you just do it now.
Yeah.
You don't delay it, rock up in Beijing, shake hands, smile for the cameras, and then go, oh, actually, mate, by the way, that £1 billion embassy you're going to build, fuck off.
Yeah, exactly. Right.
You just write a letter. All very odd, to be honest with you.
Like I said, you get it if you know you're going to say no, you say it now, and then you tickle his balls for the next few months before you fly over there.
Yes, that's one way to put it, certainly. Anyway, moving on from that into Europe, we did have some data out of the Eurozone yesterday. Headline CPI rising by 2.2% on an annual basis in November, up from the prior 2.1%. Core prices remaining unchanged at 2.4% on an annual basis. But I think some of the hawks on the ECB's Governing Council are going to be getting a little bit concerned about the potential for sticky inflation, because we saw services CPI rise to 3.5% year on year, which is the third straight monthly rise and does bear paying close attention to. Although the ECB's easing cycle is done and dusted, we are going to have a big disinflationary base effect from energy prices at the start of next year, at least on that headline metric. Under the surface, the details are perhaps not quite as optimistic as policymakers would want them to be. Moving on from that, we had some data yesterday noting that money market assets in the United States have surpassed $8 trillion for the first time. This is according to Crane, the analytics firm. A lot of people, this is a sort of perennial bugbear of mine, a lot of people will look at this and go, oh, it's cash on the sidelines that can flow into stocks. It really is not, if we're being completely honest with you. There are various reasons for parking funds in money markets. Yes, one of them is potentially to wait for an investment opportunity, but others are simply people who need to or want to hold cash, finding a place to park that cash. The other thing is that, of course, as the economy grows, the amount of money and the amount of assets within that economy grows. So it should be no surprise that the amount of assets in money market funds continues to increase over time. This is why with things like this, and also with things like the Fed balance sheet, which is another classic one, it's always better to compare it relative to something, relative to GDP, for example, because that gives you an actual idea of how things are evolving. Anyway, rant over. Last thing on the United States, we did have some data out from Adobe yesterday, noting that holiday shopping over the 5-day holiday weekend, spending rose by 7.7% on a year-on-year basis, up to $44.2 billion. Having said that, and I've now lost the number, which is rather annoying and clearly shows how well prepared I am for the show this morning. Where the bloody hell's that thing gone? Talk amongst yourselves for a moment. Hang on. Here we are. I've got it here. It was also pointed out to me yesterday by our good friend Batesy that actually usage of buy now, pay later services, that also rose by about 5% year on year. So potentially a little bit of a red flag on that one. Moving on, just a couple of other bits and bobs before we finish, before I finish up for the time being. In the AI space, Amazon, they announced updates to a whole host of their AI models yesterday. They also launched some new chips of their own, the in-house built Cranium 3 AI chip. Yeah. Apparently, these chips are more cost effective than those offered by NVIDIA, but they are also built to work with NVIDIA's architecture. So if that makes sense to you, then fire away. Meanwhile, OpenAI, they are apparently developing a new large language model. This is according to the information, citing sources familiar, and it's going to be called Dalek. Now, I'm sorry, but can we just, if there's any branding consultants out there wanting some work, get yourself to Silicon Valley, because all of these AI companies need renaming at this point.
The Jaguar designer, he's now jobless, so maybe he can get over there and kind of come up with ideas.
There you go. Something for him to do. Moving on from that, a couple of bits of corporate news. Airbus, they've this morning downgraded their delivery guidance. They now expect to deliver 790 commercial jets this year. That's down from the prior 820, and this is as a result of some quality issues that they've had with their suppliers who build the fuselage panels for their A320 aircraft. They have, though, maintained their financial guidance, so they don't see that having too much of an impact. And last, but by no means least, Walmart have opened another owned and operated milk processing facility in Georgia, which will create more than 400 new jobs in the state. And that is utterly amazing.
Oh, God. Pat yourself on the back. You heard it here first, etc., etc.
Brilliant moves, that one.
Oh, God. Moving on. Thanks for that. Well, thank you, Michael. So before I jump into the overnight news roundup, where it will be pun-free, hopefully, courtesy of Zach Eisman again, as always, do follow fuck off Clive Lambert. So for those who are aware, obviously you're not going to be aware, but he's just WhatsApp both of us saying stop milking those puns. Thank you very much for that. Anyway, do check out the overnight news roundup on our Substack. It is a very fine way to get a concise update of what's been moving markets over, or in the important news that's been moving markets overnight. Pretty much what it says on the tin. Before I do crack on, though, we just had an exclusive from our friends at EconoStream, who, if you have a kind of an underlying kind of urge to keep up to date with what the ECB are doing, definitely follow EconoStream on Twitter. That is an endorsement because that's what they specialize in, and they do some very good interviews with ECB bankers. They've got exclusives from Martin's Kazakhs saying the only thing I can clearly say is that currently available data do not, in my view, want a strong discussion on changing the policy rate. So the key man from he's from Latvia, I think, isn't he? Kazakhs? I think so, yeah.
Let's say yes.
Yeah, he's the Latvian central bank president, obviously also on the ECB governing body. He's very much looking to stand pat on the rates. But anyway, moving on. Oh, God, that was a pun. Right, where was I? The SEC blocks leveraged ETF products. The SEC has issued warning letters to firms including Direxion, ProShares and Tidal, blocking the introduction of products designed to deliver 2 or 3 times the daily returns on stocks, commodities and cryptocurrencies. So this would be those like triple leveraged, etc. kind of products. A Reuters article, they've noted that an acute global shortage of memory chips is forcing AI and consumer electronic companies to fight for dwindling supplies as prices soar for the unglamorous but essential components that allow devices to store data. Moving on to Bitcoin, Harvard University increased its investment in iShares Bitcoin Trust ETF to nearly $500 million last quarter. Bitcoin's values dropped 20% this quarter, potentially leading to a 14% loss on Harvard's recent Bitcoin purchases. Wah, wah, wah. UK political developments. Nigel Farage has told donors he expects a deal or a merger between his Reform UK party and the Conservatives ahead of the next general election, suggesting he does not believe he can sweep to power alone. See, people are making a big deal out of this, but when you actually look at how the voting is being split now that Reform have come to power, the worst thing we can have will be Reform the worst thing for Reform will be getting the most votes, but not a clear majority. Because then we are hung parliament, then we got a load of aggro. So it does kind of make sense for Reform to come up with a deal before the election. Do you see what I mean? So then this is the position because the chances are they're going to be sharing the votes anyway.
You're absolutely right. And again, it sounds significant when it's front page of the FT, but in reality, it's kind of what you would expect.
Yeah, it's common sense. And you know what? I'll pay good money for a party that kind of endorses a bit common sense at the moment. But moving on, Swiss inflation undershoots SMB forecasts. Swiss consumer prices were unchanged in November from a year earlier, with core inflation sliding to the weakest in more than 4 years. The outcome means the inflation this quarter is likely to undershoot Swiss National Bank's 0.4% forecast. Pardon me. What else we got? China's services PMI weakens. China's rating dog. You still need to tell me about that over a beer. The general services PMI fell to 52.1 in November from 52.6 in October, marking the lowest level in 5 months, although it is still expansionary as it's above 50, obviously. Sticking with China, China's independent oil refineries are boosting their intake of Iranian crude from onshore tanks and shipping idling at sea after Beijing issued a fresh round of import quotas last month. Sticking with China, China's copper smelters are in a stalemate with Antofagasta in talks to set a benchmark for the industry due to the prospect of negative fees for turning ore into metal. China said in a statement it plans to boost inbound tourism, air routes, and increase direct flights, particularly from countries participating in the Belt and Road Initiative. Obviously, this comes anecdotally as they severely cut, I believe it's 40% we mentioned, tourism flights between China and Japan. So maybe they're looking to make up for that shortfall. What else have we got? Geopolitical news. Kremlin and US talks conclude without Ukraine deal. No surprise there. 5-hour meeting at the Kremlin between Putin and Steve Witkoff from the US and Jared Kushner. He's back. Concluded with them seeking an agreement to end the war, but the talks were, quote, useful and constructive. That's according to a Russian official. EU Russian asset gas plans. Belgium has dismissed the European Union's legal proposal to tap frozen assets to back a loan for Ukraine. The European Union has reached a deal to phase out Russian gas faster than originally planned, a move that aims to finally sever ties between the bloc and its once primary energy supply. Sticking with kind of Russia, Ukraine has expanded its campaign against Russia's energy infrastructure, targeting its shadow fleet and oil terminals in the Black Sea. We saw yesterday, an oil tanker was hit between Russia and Georgia, although it was sunflower oil, which was a bit of a weird one because normally Ukraine take full responsibility for this. And then as soon as it was announced, it was actually sunflower oil, which obviously is a food stuff, which is kind of seen as a bit of a red line in terms of what you can hit. They said that it was nothing to do with them. So the cynic in me makes me wonder if someone read oil and they just thought, well, fuck it, we'll shoot a missile at it. And then they realized it was the wrong type of oil. But, who am I? What else we got? Israel hands over Arrow 3 to Germany. Israel complete to hand over its Arrow 3 anti-ballistic missile system to Germany on Wednesday, marking the first time the country will have independent access to high-end military assets. And equity news before I hand back to you. Oracle credit default costs surge. The cost for protecting Oracle's debt against default reached its highest level since March 2009, rising about 1.3% on the year. Again, still a very low number, but something to keep your eye on, because as soon as this gets more mainstream coverage, the talking heads on Twitter will be all over it.
Well,
go on.
I think the talking heads on Twitter already are all over it.
Are they?
Well, I've seen a few, and I'm not a CDS expert. Let me just throw that out there. But the issue that I have with all of this is liquidity and volumes in equity CDS is like pitiful. I mean, we often say that liquidity is like my barnet, as in thin and wispy. I mean, it's more like a skinhead's barnet in terms of liquidity in equity CDS. There just isn't any. So, makes for a great headline, but I'm not overly bothered.
No, absolutely. I think maybe the reason I hadn't noticed it is I'm trying to spend less time on X, believe it or not, and actually get some work done. But anyway, moving on quickly from me. What else can I do before I hand back to you? Airbus, the aircraft giant, the EU stalwart, as I said, it's lowering its aircraft delivery target for the year to 790 from 820 due to a quality issue with metal panels on hundreds of A320 jets. This is a major blow to the group as it struggles to recover from supply chain hurdles. So, slightly turbulent times for Airbus. Back to you in the studio.
Good stuff. Thank you, Ryan.
You don't need that.
No, I don't at all. In terms of today, then, we've got some services PMI figures this morning. The final November data from the Eurozone is due at the top of the hour in 5 minutes' time, expected unrevised at 53.1, followed by final services data from the UK at the bottom of the hour, which is also expected unrevised at 50.5. In terms of the remainder of the day, at 10 o'clock this morning, we get the latest PPI figures out of Europe. Eurozone PPI seen having fallen by 0.5% on the year in October, compared to the 0.2% decline that we saw in September. And then into the US session this afternoon, we do have a few notable data releases stateside. At 1:15, we get the latest ADP employment report.
Yes.
I was waiting for that. The ADP data is set to show a very modest private sector jobs gain of 5,000 in November. That would be compared to the 42,000 that we saw in October. And do just bear in mind that the data might potentially, maybe, possibly carry a little bit of greater weight than usual, because, of course, we will not be getting either the partial October or full November BLS jobs reports until after the next FOMC meeting, which is, of course, this time next week. In any case, money markets continuing to discount around a 90% chance that the Fed do indeed deliver a 25 basis point cut in a week's time. Also out of the States today, we get the latest industrial production data at 2:15. Not only is industry a tiny portion of the US economy, this data is also for September, so it's likely to be completely and utterly ignored by market participants. And then at 3 o'clock, we get the latest ISM services PMI, the index expected at 52 in November, modestly lower than the 52.4 that we printed in October. In terms of other bits and bobs, we are due to hear from a few central bank speakers, including ECB President Lagarde and Chief Economist Philip Lane, as well as the arch hawk down at the BOE, Catherine Mann, who will be making some remarks later on this afternoon. And on the earnings front, we're due to hear from more US retailers, with the likes of Macy's reporting before the market open. And then we have Salesforce dropping their figures after the market close. That is all from me this morning.
Wonderful, Mr. Michael Brown. As always, an absolute pleasure. Today, well, most days, the first person I talked to, and I couldn't think of a better person, especially when I'm usually covered in McDonald's from the night before. And on that note, listeners, again, thank you so much for tuning in again in increasing numbers. Tell your friends, tell your family, tell your nan, because we want to get these numbers. I really want to pump those numbers.